I have flipped over 500 houses in the past several years and I've learned a lot of lessons. But what I would like to do in this video is to go back in time and talk about my second flip that I ever did. It went extremely smoothly, so I want to talk about the biggest differences between my first flip, which was not a good flip, and my second flip, which went extremely well. If you're following along, this is the 5th video in my 10-part series going over my very first 10 real estate deals. Last time we spent a lot of time and a lot of money and made a very little profit. In this video, I want to talk about how I was able to spend a very little bit of time and a very little bit of money to make a lot of profit, which is what I think all of us want. My name's Sam and I own $40 million worth of real estate that I bought without using any of my own money. I also own a flipping company that's going to buy and sell over 300 houses this year. Those are cool numbers and cool stats to say, but the goal of this video is not to brag on my accomplishments. The goal of this video is to help you make more money by being more efficient and more effective fix and flipper on your very first flip. So in this video, I'm going to talk about my second flip. I'm going to go over the numbers, how I found it, break it all down, but more importantly, I'm going to talk about the lessons that I learned between my first and second flip and why the second flip was such a good deal and I was able to maximize profit for minimal effort. And then I want to sit back and look at lessons learned from my second flip to now, just some bigger picture things, a different perspective, giving you the perspective of a brand new real estate flipper to somebody that's done a lot of deals, will allow you to hopefully fill in the gaps wherever you are in your real estate journey. So I remember back in 2016 when I had my full-time job and just started dabbling into real estate, and on my lunch break I was skimming through Zillow and trying to find deals, which is a pretty rough way to do it these days, but back then in 2016, and I think in the near future, it was a pretty good way to find deals, finding deals on the market. I looked at this property and it was a great deal, it looked like to me. I think it was advertised for $79,000. It was listed, it had been listed for 2 or 3 months, but looking at the numbers, I thought there's something wrong with this house. It's been sitting for 3 months and it's a pretty good deal at 80 grand, so there's gotta be something wrong with the property, and there's no pictures of the basement. So I just kind of let it slide, but a few weeks later, it popped back up in my search with the price drop to $74,900, so I thought, might as well go look at it and at least see what's going on. So I looked around the house, walked around the outside, the inside, had a decent budget, but nothing crazy in my head, and I thought, why hasn't this house sold? And I walked down the stairs and I saw exactly why. There was inches of mud in the basement. Not the entire basement, but in about a third of it in the corner, there was probably 2 inches of mud on the floor in the basement. There was mud on the wall, and I thought, well, this is why. There's obviously a ginormous crack behind all this mud. This is a major foundational issue. I don't want anything to do with it. But me being stupid or smart, I'll let you decide. I decided to call in an expert, somebody that was in the foundation repair business. They went out there. I remember seeing them scrape some of the mud off and had a little bit of a look, and they said, this is not a big deal at all. This concrete is just extremely porous. So over time, it lets mud kind of go through the little bitty holes and cracks, but we can scrape all this off, drill about 10 holes in this wall and fill it with epoxy, and it will be completely solid like the first day it was poured, assuming it was poured right. I was the only one that did that, thought a little bit outside the box. So having that information, I was able to negotiate and get this property under contract for $67,000, which is a very small number, but as you'll see later in this video, real estate goes up in value a lot over time. I'm gonna use this house as an example of the power of real estate. I was able to get under contract for $67,000, which at the time, real estate was much cheaper than it is now. It was still a really good deal. So my initial rehab budget was about $30,000, not really knowing exactly what things were gonna cost. My first flip, as you have seen, if you watched the last video, did not go very well. And if you have not watched the last video, check out the video up here where I walk through my very first flip, which was a freaking burn house and a nightmare, a complete gut rehab on the first project. Don't do that. Watch that video and then don't do what I did. But this one was different. I just got my butt kicked on the last one for 8 months, making a very minimal amount of profit. I did not want to do that on this project. So I decided to hire things out and lean on other people. And having $30,000 be my initial quote, I thought was going to be enough. I probably thought it needed like mid to lower 20,000s in repairs, but I wanted to leave myself a lot of fluff, so I put $30,000 into the rehab budget. Everything went pretty smoothly. I remember a few issues coming up, and the fact that I hired somebody out and made it a little bit more expensive. More on the reasons for that here in a little bit when I talk about lessons learned. But what I ended up spending was over budget, as you'd expect. It only ended up being about $35,000 though. So I only went $5,000 over my already inflated budget. I look at it as a win. You could look at it as an underestimate, but overall I was happy with that numbers because I was still able to get a lot of profit without really spending very much time at the property. So back in 2016, the market was well on its recovery from the '08 kerfluffle. However, it wasn't fully back to anywhere near where it is now. So I was having trouble figuring out what to list the property at. Most of the houses in the neighborhood had sold for that $130,000, $140,000 price point. Seemed like it was a little bit light though for what this property had. As you can see by the pictures, it was a decent flip. We made the kitchen nice, bathroom nice. We didn't overdo anything, but we made it a little bit nicer than the other houses in the area. So the fact that it was a little bit nicer, I didn't really know what to list it at. So I remember thinking, let's push the market a little bit, and if we have to drop the price, that's fine. Got plenty of spread here, so I listed at $145,000. By the second week, we got a full price offer, which seems normal to you all, or maybe seems like a little bit of a long time, but it wasn't. Back then, it took 30 to 45 days to sell most flips with a price reduction or two. It wasn't like the market has been over the past several months. However, 2 weeks in, we did get a full price offer. So we sold it for $145,000 with minimal work needed on inspection fixes. We did have to pay a realtor, but I was able to net profit after buying it for $67,000, putting $35,000 into it, selling it for $145,000, was able to net after everything a little over $33,000, which was huge for me at the time, considering I made about half of that in 8 months on my first flip. You know, making $33,000, $34,000 in 3 months without really doing anything was a home run for me. The project looked great, everything went smoothly, and I didn't have to put out all the fires myself. So now that you know the numbers and saw that it was, not a home run, I loved it, but, a still good deal for the effort that we put into it. Let's talk about some lessons learned so that when you go into your first or second flip, you can hopefully put in a little bit of work and make a lot of money. The first lesson I learned was leaning on other people. On that first project, I tried to do everything myself that I could. I tried to get 3 bids on everything. I was meeting insulation people out there, 3 times a week to try to get 3 bids. And I was meeting drywall guys out there, several times a week to try to get a handful of bids. So I was just at the property all the time, even though I wasn't doing the work. But a lot of the times I was doing the work. On this project, I just said, we got a good deal, build it in the budget, let's let somebody else run the project. We hired a professional company. It was a guy and his brother-in-law, so it wasn't a huge company, but we hired somebody else that had done rehabs before. Remember, this was my second rehab. Now it cost us probably a little bit of extra money with their management fees. However, they were able to source materials, they were able to source contractors that did good, inexpensive work, and overall, I think I saved a lot of money. Because managing this project myself, 6 months, 7 months, I was able to do it in 3 months. And every single day that you own a flip, there's holding costs and owning costs. You have to pay insurance and taxes and probably cost to actually borrow the money to do the flip. So things add up. Doing everything yourself is usually not the right answer, especially at first. So leaning on somebody else that was an expert that was able to put out the fires with me or for me and push the project along in record time for what I was doing before made a big difference. Another big lesson learned was looking past what other people are not willing to look past. The mud or mold or minor foundation cracks, things like that scare your novice investor. Knowing that a lot of them are super easy fixes or calling in an expert to tell you that it's an easy fix made all the difference on this deal. I was able to get a home run buy that allowed me to hire something out and allowed me to do it quickly and still make a lot of profit because I got such a good deal on the front end. So getting a really good deal and spending that extra time negotiating at the beginning can allow you to hire things out or just even make more mistakes. The third thing I learned on this project was staging really helps. We did stage our first flip because it was a complete gut and everything looked awesome. A project like this where you're redoing a few things, making them brand new, but basically taking what's there and making it look nicer, not redoing all the floorboards or maybe not replacing all the flooring if it is in good shape. Things like that on a $145,000 house, that's what we needed to do. We didn't need to completely redo everything. So the fact was, it wasn't a brand new house. Having staging in there draws the potential buyer's eyes to other things than trying to nitpick every corner of the house, because this house was built in the 1950s. Not every single wall was exactly 90-degree angles. Not everything was perfect. We made it the best we could. We didn't cut any corners, but it wasn't a brand new house. Having other things in there allows the actual person walking through the house to visualize themselves sitting on the couch watching TV, or laying in bed or sitting at the kitchen table. It allows them to visualize themselves in the house, but it also keeps their eyes away from nitpicking every little thing. So that was a huge added bonus staging this house. And maybe more importantly, sitting here now looking back, this property specifically has shown me how powerful real estate really is. This house was sold for $145,000 6 years ago. And I know the last 6 years have been awesome, but now it is worth at least $245,000, probably a little bit more. So it's gone up $100,000 in value and 70% in value over 6 years. Now it's been dramatic recently, I get it, it's been like this, but if you look back, every 15 years at minimum, real estate doubles in value in this country, and we're talking back to 1900. So through 08, through the Great Depression, through interest rates being at the 15 to 20% in the 1970s, real estate every 15 years at minimum doubles in value. So real estate's a great market and a great industry to get into, whether you're flipping or whether you're buying rental properties. Just buying real estate is one of the best things you can do. If I told you you could make an investment or buy a stock that was guaranteed to double in value every 10 to 15 years, you would think that stock is made up. It's not. That's what real estate is. You just got to get in the space. And hopefully this video and all my other videos on this channel really help you understand that. If you got any value out of this video, please subscribe to this channel and check out this playlist over here that goes through the other videos in this series of my first 10 investments. Catch you on the next one.